A very good morning, everyone. Welcome back to our YouTube channel. Hope you guys are having a good day. So it's 9:17 and market has already opened. So yeah, before we start, let's just let people join. We'll start. We'll start with the pre-market news, also the yesterday's post-market news, and will be the and also the news which are currently impacting and impacted the today's market and gap ups and so gap downs. So yeah, we'll start with the pre-market news. Welcome back again, everyone. So it's Wednesday, 1st July 2026. I hope everyone doing well. So in today's session, I'll walk you through the what happened in the U.S. market overnight. Then we look at how our session Sensex and Nifty closed yesterday. Why they moved the way they did yesterday, and which stocks were the news, and what happened with gold and crude oil, and finally what to watch out for the today's session. So stay with me for the full session. I'll be covering this session session by session. So yeah, we'll talk about the US market first. So let's start where every trading day actually like starts for us. One is Wall Street. So yesterday, Tuesday, 30th of June, so was the last trading day of the second quarter of 2026, and it turned out to be a strong one of the U.S. market. The Dow Jones Industrial Average closed at 52,319.20 up to 136 points or 0.26%. So now this might sound like a small percentage more, but it's actually a fresh record closing high of the Dow. So this came just one day after the Dow crossed the 52,000 mark for the very first time in the history on Monday. And the Nasdaq Composite did even better. It jumped 1.52%, which closed at 26,213.72, and the S&P 500 gained 0.79% to close at 7,499. And the Russell 2000, which tracks small companies, was up to 0.46% to 3,024.37, which is actually a new milestone level for the index too. So yeah, overall a green quarter end for US market in the US market it's kind of green quarter end. So in fact, this quarter has been one of the best for major US indexes since the pandemic recovery days of 2020. Now, why did the market do so well yesterday? So let me just break this to two main reasons because both are important for us to understand. So they are the main major reason is Alphabet, which I am mentioning from past days. So one is Alphabet, which is the parent company of Google, officially joined the Dow Jones Industrial Average this week, and it's on its very first trading day as a Dow member. Alphabet stock jumped close to 5% when a big high value stocks like Alphabet enters an index and rallies at the same time. It gives a real life lift to the whole index, and that's a big part of why Dow Jones like crossed 52,000 for the first time. And the second reason is actually this is the biggest global story. So US and Iran tension like is again. Both sides agreed to stop the pit for that attacks that had flared up over the weekend. And importantly, they agreed to allow commercial ships to safely pass through the Strait of Hormuz. So now, for those who don't track this closely, the Strait of Hormuz is one of the most important routes for oil shipment in the world. And so, any easing of tensions that is taken very positively by marketers because it reduces the fear of an oil supply. So now, just let me tell you about the smaller but interesting story from yesterday's market. That is cryptocurrency. Bitcoin and other cryptocurrencies stayed kind of weak yesterday, and there were reports that a major Bitcoin holding company was planning to sell part of its Bitcoin treasury as part of turnaround plan. So this pushed the broader crypto market down. The total crypto market capitalization slipped towards the $2 trillion mark, which is actually its lowest level since past September 2024. So while stocks were celebrating, crypto was having a rough day. So good reminder that different asset classes don't always move together. So yeah, and there is a one more small detail worth mentioning, which is SpaceX is set to join the Nasdaq 100 index before the market opens on July 7th. That stock is surged over 7% on Monday on this news. So though it cooled off a bit in early trading on Tuesday, just something to keep on your radar if you track SpaceX related news. So yeah, let's come to today because that's really what matters most for our live session, live updates. So here's what the clearly early indicators are telling us in the morning. One is US futures are actually touch weak right now. So Nasdaq futures are down close to 0.3%, and Russell 2000 futures are down about 0.4%. So after such a strong quarter end rally, we are seeing a small pause, which is very normal. Markets really go up in the straight line forever, and the VIX, which people often call the fear index of the market, has dropped sharply down close to 7%. Falling VIX usually means investors are feeling calmer and less nervous about like sudden big moves. So we come to our own market indicator, which is GIFT Nifty. For those who are new to the channel, GIFT Nifty trades most 21 hours a day and gives us a good sense of how our market might open because it observes overnight US action and Asian market cues and any big news that breaks after our market closes. And as of this morning, GIFT Nifty is trading around 23,970, about 71 points. Let me share my screen also. So yeah, let's talk about Gift Nifty, which is down about 71 points. Uh, just give a minute, just give some time. We'll share the screen. We're having some kind of technical issues here. We'll just share a screen soon. Just be in the line for some time. Just be with us. So yeah, I was talking about the Gift Nifty. Yeah, it is down by 71 points, which is 0.3% compared to yesterday's close. So this is telling us that our market is likely to open an mildly weak note today. Yeah. So also worth noticing is Asian markets are giving mixed signals today. Some indices are showing positive momentum on the back of technology stocks, but there is some caution too, as everyone is waiting for upcoming US economic data and also central bank commentary. So overall, the setup for the today is what I call cautiously mixed, not a big red flag, but also not a confident green line. This kind of environment usually means stock specific action rather than one of clean direction for the whole market. So keep that in mind as we go through our today's whole session. So, all right. Now let's get into part of it, which is our own market and how it closed yesterday, Tuesday, which is 30th June. So, yeah, Sensex closed at 76,478.67, down by 249.70 points or 0.33%. Nifty 50 closed at 23,865, which is 80.50 points of 0.34%. Slipping below the psychologically important 23,900 mark, and also Bank Nifty ended 57,542.90, down by 184.545 points, which is 0.32%. So this was actually the second straight session of losses, like for our benchmark indices, and these are like two red days in a row. But yeah, this is important, but the picture underneath the surface was not as bad as the headline number like it suggests. So let's talk about market breadths. Market breadth that basically tell us how market stocks went up versus how market went down, regardless of what the index itself like did. And yesterday, roughly 2,250 stocks advanced on the exchange, while around 1,805 stocks were declined. About 172 stocks stayed unchanged. That means more stocks you casually went up, that also then went down. And even though the index closed lower, this tells us the fall was concentrated in a big few way. So heavyweight stocks mainly 90 rather than a broad-based sell-off across the whole market. So yeah, let's go by sector because this where the real story is. The Nifty IT index was the biggest loser of the day yesterday, and the falling close to 2.57%. This was clearly the single biggest drag on the overall index, which happened yesterday. On the other hand, domestic focus sectors, which actually did well, and Nifty Realty and Nifty Consumer durables both gained more than 1% each. And Nifty Pharma advanced about 0.4%. And meanwhile, PSU Bank, also media and FMCG analysis, it's slipped around 0.7%. And yeah, here's something nice for broader markets lovers. The Nifty Mid Cap, Nifty Mid Cap 100 index actually rose 0.4%, and the Nifty Small Cap it gained close to 1%. So while the big frontline indices were red, mid and small cap stocks were actually having a decent day. So this is a very important news to share with you guys. So because of a lot of retail investors hold mid cap and also small cap stocks, and their portfolio may have actually been green yesterday. So even though the news headlines were saying market falls, they're holding their. yeah, they were holding their stocks, I mean, small cap and mid cap stocks. So yeah, let's talk about foreign and domestic investors' activity, because this way tell us a lot about market sentiment. So FII, that is foreign institutional investors, were net sellers yesterday, selling shares with about 2,556 crore rupees. And DIs, domestic institutional investors, were strong net buyers, buying shares for about worth 6,842 crore rupees. This is a very healthy sign. And honestly, whenever foreign investors sell and our own domestic fund, like mutual funds, insurance companies, so on, step in buying, it cushions the fall and shows confidence from within the country. Without this domestic buying support, yesterday's fall would have been much sharper. So yeah, let's slow down and really understand why the market moved that way uh, yesterday. So I want to explain this properly because just showing numbers doesn't tell the full story. Understanding why and why is what actually like helps you trade to or invest in the market. The first point is, as I mentioned already, IT stocks were hit hard. TCS, Infosys, HCL Technologies, and Tech Mahindra all fell between 2% to 3.5% yesterday. So now, why would tech IT stocks like fall so sharply? The answer lies in the United States. Strong US economic data came out. The job opening from the Jobs report climbed to a 2-year high, and inflation numbers are still. Just I'll come back, guys. They're having kind of issues with sharing screen. Let me just come back with the solution. So it's working now. I'll just share the screen of Nifty chart. You just look at. Also, I'll be updating the news. So as I was mentioning about the IT sector, which is actually falling, which fell between 2% to 3.5%. And also I have told that United States is affecting this market, this sector, because of the job openings in jobs report climbed 2-year high, and inflation numbers are still running well above the Federal Reserve comfort zone. So when the US economy look at this strong and inflation stays sticky, market starts pricing in the chance that Federal Reserve will raise interest. And higher US interest rates are bad news for Indian IT companies because a large part of their revenue comes from US clients. And higher rate can slow down technology spending by American companies. So that's the direct link between US jobs reports and our IT stocks falling. And the second point is markets are now pricing in at least one rate hike this year. And the last first one could come as early as September. The Federal Reserve Chair, Kevin Walsh, is expected to speak today. And traders across the world will be listening very closely to every word for clues on what the central bank plans to do next. This is honestly one of the biggest global themes right now, and it's affecting everything from IT stocks to global prices, gold prices, which we'll talk about like shortly. And third reason we already know, which is Iran's situation. On one side, there's genuine improvement. The US and Iran agreed to stop attacking each other and to allow commercial trip to the state of Hormuz, which is safely. And this is a big positive because it reduces fear of an oil supply disruption. But at the same time, Iran denied that it has any direct meeting planned with the US, even though it agreed to send an expert delegation to Doha in Qatar, mainly to discuss the release of a frozen in Iranian funds. So the situation is improving step by step, but it's not fully resolved. And let's keep a small layer of caution in the market. So yeah, the fourth point is there is actually good news from our own Reserve Bank of India. The RBI released its financial stability report yesterday, and it has some really encouraging news, which is it said that the Indian financial system remains resilient with strong bank and non-bank balance sheets. Gross non-performing assets, which basically means bad loans, have touched a multi-decade low of just 1.8% as March 2026. So this is a very strong point for the banking sector story. Even though banking stocks didn't see a big rally yesterday on this news, it's the kind of structural positive that supports the sector over the medium term. And there is one more corporate story which I should mention is Hindustan Unilever's chairman commented that input cost pressures are gradually easing now that crude oil prices have come down from their recent high. Though he mentioned it will take some time for cost to fully normalize. The matters because this actually matters because this crude is a major import for the large part of Hindustan Unilever's product portfolio. So, and crude has crossed the $100 a barrel, yeah, $100 a barrel at one point during that recent tensions, squeezing margin for companies like this HUL. So yeah, yesterday I mentioned multiple times to keep your eye on Maruti Suzuki. So Maruti Suzuki was the top gainer of the day yesterday, rising 4.65% to close at 14,035 rupees. The reason, yeah, it's simple. Global brokerage. Jeffries upgraded the stocks from hold to buy and also raised its target price. Whenever a large global brokerage upgrades its stocks like this, it usually triggers a wave of institutional buying, and that's exactly what we saw yesterday. And Titan company at it has gained 2.95% to close at 4,403 rupees. Titan has been fairly consistent outperformer in the consumption space. Bajaj Finance rose 2.48% to close at 1,000 rupees. So yeah, here's actually interesting small cap and mid cap story from yesterday, which is Jackson Paul Pharmaceutical surged to close up to 13% after reports emerged that the company has agreed to acquire a 85% stake in Equitas Healthcare. This is a classic example of how M&A or merger and acquisition news can move stock sharply in a single session. So Sterling and Wilson Renewable Energy gained over 1% after securing a $560 million solar project, which is actually in Egypt. So order wins like this are always a positive trigger for infrastructure and renewable energy companies. The other names that closed higher yesterday include Trent, Bharti Airtel, Adani Ports, Adani Enterprises, and Shriram Finance. And we should talk about the losers. As I mentioned yesterday, there was a increase in open interest in Nature Motors was the biggest loser of the session, falling close to 3.95%. Tata Consumer Producers declined 3.17%, and Wipro lost to 2.54%. And also, we already discussed that the whole IT pack was weak. TCS, Infosys, HCL, and Tech Mahindra all closed in a red, dragging the technology index down close to 0.7% for the day. So, if I had to summarize yesterday's talk the whole story in a single line, it would be auto and select consumption names are were the heroes of the day, while IT was clearly the villain. And this kind of sector rotation is very common in markets, and that's good reminder that even on red day for the index, there is always pockets of opportunity if you know where to look at. So you guys actually give us 5 minutes time. We'll be back with the commodity updates, which is oil and gold. We'll be back with that update. Just stay with us and be in the session. We'll be back in 5 minutes. Yeah, guys, we are back. So thank you for staying. So as I mentioned, we'll be continuing with the gold update, commodity update. So yeah, we'll start with the gold as I mentioned, and yeah, this one is one of the biggest story right now about the gold on MCX. Gold futures fell sharply yesterday and today, and dropping as much as 1.37%, touching an intraday low near 1,40,450 rupees per 10 gram, before settling around 1,41,124 rupees. On the international front, gold slipped toward $4,000 on ounce, which is its lowest level in almost 8 months. And why you guys think gold is falling that much? If you guys know that answer, just let me know in the comment section. Why you, according to you guys, why is gold is falling? Why it's going down? And it's nearly low. Yeah, and it's nearly low, like almost from the 8 months. From the past 8 months, it now it has went low. Let me know your thoughts about this, but I'll be telling the clear reasons. One is, as I mentioned earlier, strong US job and inflation data, which is increasing the odds of Federal Reserve's rate hike. And here's the simplest logic behind why that hurts gold that much. Gold doesn't pay any interest or dividend. So when interest rates go up, other assets like bonds starts offering better returns, and investors shift money away from gold into those interest-paying assets. That's the direct mechanical link between interest rates and gold prices. That's it. The second reason would be as tensions between Iran and the US continues to ease, the safe haven demanded for gold is like reducing. Gold is traditionally something people rush to buy when they are scared of war, inflation, or economic trouble. So as that fear reduces, some of that panic buying premium comes out of the price. So yeah, here's the number that really puts this is in a proper perspective. Gold is now down for fourth straight month, and this has actually been its worst quarterly performance since 2013. So that's a massive shift from how strong gold was earlier this year, and it just shows how quickly sentiment can turn into commodity markets. So for technical levels on gold, resistance on the upside is around 1,43,800, then 1,44,200, and 1,44,750 for the more aggressive targets. So on the downside, support will be around 1,41,850, then 1,41,200, also 1,40,500 as the next level if the selling continues. So if you are tracking gold today, these are the zones where you might see some buying interest step in, or when sellers might take charge if the price be below. And yeah, we shouldn't forget the crude oil update. Let's just move to the crude oil. And compared to gold, crude has actually been fairly kind of calm. Brent crude is trading in the 72 to $74 per barrel range, and the WTI crude opened today near $70.44. And for the rest of the day, it's expected to trade somewhere between $68 and $72. So, why is crude relatively stable while gold is falling so sharply? So yeah, two forces are working completely opposite directions here. And on one hand, the easing of tensions around the state of Hormuz is normally something that would push oil prices down because the market is less worried about the supply disruption now. So on the other hand, OPEC production has remained on the low. Now, crude is basically in a wait and watch range bound mode. Traders are closely watching upcoming US crude inventory data and the US jobs report. Let this be one of the for the next big directional moves. So when we take the technical side for the crude on MCX, resistance level to watch around 6,750 and 6,800 as the next question if price slips further. So keep this zones market uh, zones, like you should keep your eye in this particular zones if you are tracking crude like in a intraday for today. And of course we shouldn't forget the silver about the silver because honestly this has been one of the wildest stories in the commodity this year. So silver spot price internationally is trading around $58 to $59 per ounce as of yesterday's close, up slightly about 0.3 to 0.7%, which has actually went up. So now here's the actual real story about the silver. Silver hit an all-time high over $121 an ounce back in January this year, 2026, after an incredibly 147% rally through 2025. Since that January peak, silver has corrected sharply, down more than 20% just in the last month alone. So over 40% from its all-time high. And in India, on a retail basis, silver is trading around 2,35,000, yeah, 2,35,000 rupees per kilogram. So which is works out to roughly 235 rupees per gram. So you should keep in mind this number moves with the dollar rupee rate and can vary a bit city to city. So always check your local rate before quoting exact numbers on air. And why you guys think silver falls so much after such a massive rally which happened in 2025? Let me know in the comment section what exactly the reasons which may impacted this results, which may resulted. There are actually three clear reasons. One is the exchange operators raised margin requirements on silver futures, which forced a lot of like leveraged traders to sell their positions. And the US dollar strengthened as the Federal Reserve signaled it's not cutting rates anytime soon. So you should remember a strong dollar makes silver more expensive for buyers using other currencies. So demand cools off because of this. So and also the third reason is after such an extraordinary 147% natural profit booking was bound to happen. When something moves that fast, even long-term holders take money, some money from off the table. Market behavior, not necessarily some bad news or something. So here's the actually important point for you guys. None of these three big reasons behind silver's original rally have been gone away. The global silver market is still expected to run in a supply deficit in 2026, which is shortfall between what produced and what's consumed actually. So widening compared to the 2025 last year. Silver is heavily used in the solar panels, electric vehicles, and electronics, and that industrial demand story hasn't changed in any one bit. So some many analysts still see this correction as a pause, not trend reversal. Some are even projecting that silver could move back towards 90 to $100 an ounce by the end of this year if the industrial demand story plays out. The gold to silver ratio right now is around 68. Yeah, so meaning it takes about 68 ounce of the silver to equal the value of 1 ounce of gold. Historically, many traders watch this ratio to figure out which metal looks relatively cheaper at a given time. So let me give you some more global updates that we are worth knowing. So yeah, gold actually posted its biggest monthly drop since October 2008 this June, falling around 12.7% for the month. And this is now its fourth state monthly loss, and that's a really sharp down from how strong gold was earlier this year when tensions in the Middle East were pushing it up. The main driver, as we discussed, is Fed Chair Kevin signing a clear readiness to raise rates combined with the geopolitical fear premium coming off as a US Iran tension is. And there is actually small twist in Iran story, which is interestingly reports came in the Tehran actually requested to meet with the US delegation in Qatar for talks scheduled around June 30 yesterday. Even though earlier in the week Iran had denied any plans for direct talks with US, so it just the story keeps evolving. However, to our good remember to always check the very latest headline before going or taking any decisions. So because geopolitical news like this can flip market sentiment quickly in either direction. So one structural point worth mentioning is a large majority of world central banks, around 90% have publicly said that they plan to keep increasing their gold reserves this year. So even though gold prices are falling in the short term due to the rate hikes fears, there is still a strong long-term bias in the background, which many as analysts believe puts a floor under how far gold can fall. And few more important data points to track is the ISM manufacturing and PMI is due today. Pushing crude is oil inventory data is also due today, and the big one is US June job reports is coming on Thursday instead of Friday because of the July 4th holiday. All of this can move gold, dollar, and by extension our own market. And for the reference, today's approximate retail fuel prices are yeah, prices are one is petrol. Petrol is around 111.21 rupees, diesel around 97.83 rupees, and domestic LPG are around 941.550 rupees per cylinder. The Indian rupee remains under mild pressure, currently trading in the 94.5 to 94.6 range against the US dollar. So this reflects the broader cautions risk of mood globally. And a weaker rupee is actually one reason domestic gold and silver prices don't fall as much as international prices sometimes do. So the currency effect partially offsets the commodity price fall. So yeah, Asta's Fintech's IPO opened for us a subscription today. Worth a quick mention for viewers tracking the uh, primary market alongside with the secondary market. And yeah, as I mentioned yesterday, HDFC Bank has been in the news for a management reshuffle. The bank appointment Rajiv Kumar as a part-time chairman and Puneet Sharma as a chief financial officer. So both effective from December 1. So, following the previous chairman's earlier resignation, this is a stock specifically story where the flagging since SDFC Bank is one of the heaviest weighted stock on the both Sensex and Nifty. So, all are just like wrap up with your quick checklist for today's session. So you know exactly what to track through the day. The one is Gift Nifty. It is signaling a mildly weak opening for both the Sensex and the Nifty. So don't just panic if we see some red in the middle. It's actually already priced in. And Federal Reserve Chair Kevin Walsh is expected to speak today. And any hint about rate hikes could move gold and also IT stocks and even the rupee sharply. So keep this on your radar to the day. And IT sector remains the weak link right now. Watch whether it stabilizes today or drags the index down again, because that will set the tone of the broader Nifty. And auto and banking were the strong pockets yesterday, and with the RBI confirming very healthy bank balance sheets, the banking sector could continue to get support over the coming sessions. And finally, number six is a bigger event to mark on your calendar is the US June jobs report. It's coming this Thursday instead of the usual Friday, because Friday is a market holiday in the US, the 4th of the July. And this is a very important number for global markets. So keep it noted. So what happened in the US overnight? How our own Sensex and Nifty closed yesterday, and exactly why which stocks made news and the reason behind their moves, where gold and crudes are headed, and what's driving them. So and finally, what to track for the rest of the day session. We already know this. I hope you're finding this session helpful. To make this session actually interactive, I want you guys to comment. I want you guys to answer the questions and ask the questions which you want to answer. And as I'll be mentioning every time that you have, if you guys taken any trade or if you guys holding any positions, just let me know in the comments. We'll analyze it together, and we'll be back with the option chain analysis and the stocks and the calls which we have given yesterday for our customers, and we'll be telling you whatever the targets, whatever the calls we have given yesterday to our existing clients, also the demo clients, also the we'll be doing option chain analysis and indexes, which will be done by Harish. So we'll be back with the in a 15 minutes. Just stay with us in the session. So we'll be back with that update. So if you or the calls we are giving or the updates we are informing, just let me know in the comments, and just go through the links which I mentioned in the comment section, also the website link which I mentioned in the description. So yeah, just be in the session for a minute, for 15 minutes. We'll be back in a 15 minutes, and we'll give a new updates.
So hi everyone. We'll just talk about we'll just discuss about index analysis and option chain analysis. So before that, we'll also discuss the calls that we gave yesterday. Yeah, so hope you can see the screen. So these were yesterday's call. Yeah. So we had given stock FNO calls, Nuama, which is expiry is July, and strike price is 1,700 call option, which was given in 9:29 a.m. So the entry price was around 128 to 130, and the target achieved around the 12 points. So I'll just show you in the chart. So yesterday 9:29. So the entry price was around 128, and we achieved around 12 points, 10 to 12 points, which was around 138 to 140. So this was our yesterday's call. And the second call was TCS July 2000 strike price. So even that was a call option. So the entry was at 9:55 a.m. and the entry price was at 94 to 96, where we achieved 10 points. So it was around so the entry was at 94 rupees at 9:55 a.m. and we could see that the price reached 104. So we exactly achieved 10 points. I'll just show you the call that we gave. So you could see that the entry was at 9:55, and we exactly gave entry around 94 to 96 rupees, and target achieved was 8 to 10 points. So we gave two calls in stock FNO segment, and we achieved the total points gained was around 18 to 22 points. So both the targets were achieved for both the stocks and calls. So The first one is Nifty 23,700 call option. This was also given yesterday. It was at 9:34 a.m. And the second one was 23,900 call option, which was given at 9:24 a.m. So both achieved the 8 points. I'll just show you one by one. So first one is Nifty 23,700 call option. So the yesterday's entry was at 310, and we achieved nearly 380. It was around 78 to 73 to 78 points. This was the first call, and the second one was 23 650. So we had given an entry at, and the price reached near the target achieved was 78 points. The price reached around 420 to 425 points. So on Nifty option calls, we totally gained around 140 to 152 points, with a combined average return of 21.5% to 23.8% overall gain. So this was yesterday's performance, and today we had given. So today we had given in stock option we had given trend 300 call option. So it was given on 9:59 a.m. So the entry price was at 114, and price reached the first target of 120, and is moving towards the second target of 124. So at 9:59 we gave entry price around 114 to 116, and the first target was 120. The price exactly reached 120. So the trade is still running. We'll be updating at the end of the session. So it has reached the first target, and the second trade was in index Nifty. We gave in index we had given a call to buy call option 23,700. Entry price was around 325 to 330 at 9:37 a.m. Yeah, entry price was around 325 to 330. We could see this area. So the we gave three targets: 345, 350, and 398. And price reached all the targets. Price had made a high of 410. So the price reached all the targets, and we had also given another trade today. So it's so Nifty July call to buy call option 650. So the entry price was around 365 to 370. So it was around 924. We gave at 924 itself. So it was around 365 to 370, and the final target was 452. and price reached all the targets. It made a high exactly 452. It reached all the targets. So these were the calls that was given today. And yesterday we had also given a BTST call on Sensex. So we had given a 77,000 put to buy at 465, and the final target was 575. So price opened at 599. So it reached all the targets. So we had given to buy at 465 to 475 range. So the price had opened at 599. So even it reached all the targets. So these were the trade performance of yesterday's and today. So today's will be updating all the calls before the market hours, at the end of the market hours. So now we'll just discuss about index analysis and option chain analysis. So before moving into option chain, we'll just look at the index, how it's performing. So we saw a strong bull start today. We also got a buy signal from our software, which gave us around 85 points. So the market currently trading in uptrend. We see strong aggressive buyers entering market today in the early in the session. So market is currently going in a correction. So if we switch to the higher time frame, you can see that the market has clearly given us a structure break and a 15 minutes time frame. So market is currently trading near the imbalance area. So since the trend is uptrend, we can look for long setups until you see a structure break on the opposite side. So you can look for a retest here, pullbacks. You can buy near the pullbacks, conforming with the candlestick patterns. So if we look at Bank Nifty, so even Bank Nifty has given us a proper structure break. But if you look at the 15 minutes time frame, we see the major structure is in downtrend. But we see a minor structure break, which shows upside move. So Nifty have a chance. We just talked about Nifty. So it's currently near imbalance area and a triple EMA. So it have a chance of movement 20 to 30 points upside. And when we discussed about Bank Nifty, it has the chances of moving up 50 to 100 points upside. Yeah, so we'll just discuss about open interest option, open interest analysis. So we'll just switch down to Nifty. So currently Nifty spot is at 23,969, and if we look at the max pain, it is locked at 24,000. So notice how closely the index is clinging to the 24,000 level. So max pain represent the exact point where option sellers making maximum money. So when spot is this close to max pain, the market is effectively pinned. So the option sellers are firmly in control of the morning session. So they are sending the index back like a magnet, whenever it tries to wander. So if we look at the PCR levels, so the PCR of Nifty is currently showing around 2.107, which is a strong bullish indicator. Put writers are aggressively dominating. So they are creating a hard cushion. So, however, the macro PCR is at 0.9746, which is technically a neutral to bearish. So this means where the immediate intraday trend is strongly insulated from crashing, the broader institutional view has placed heavy long-term caps further up the ladder. So we'll just discuss about the India VIX as well. So India VIX is at 13.62, which is up by 0.02. It is cooling off slightly and staying near 13.5. So the volatility premium is a decay heaven for option traders. It confirms that this morning 130 point up move is controlled gradually climb rather than a frantic momentum squeeze. So you can expect a range bound grinding rather than a wild directional spikes. Yeah. So we'll just talk about the OI strike price. So if you look at the 24,000 strike, where the price is currently trading, so the largest green column on the chart is right at 24,000. So it features a massive solid block with a huge striped expansion on top. So this is an absolute fortress because the solid block shows that huge overnight capital was deployed here, and the extensive hatched lines indicate that the intraday momentum traders are aggressively adding new put right now. So if we look at the OI change, the put to OI change have increased by 40.59 lakhs, while call OI change is just increased by 2.44 lakh. So this is the massive difference between the call and put. If you see the total call OI, it's around 22.54 lakhs, whereas put is around 1.14 crore. So this shows that the put writers are aggressively dominating. Yeah. So until this green column strings a sustained breakdown below 23,980 is mathematically highly improbable. So it is a solid buy the dip zone for the hour. So looking at 24,100 and 24,150 strike. So So red bars are stacked aggressively at 24,200. So we can see there is a slight call increase in 24,100 and 150 as well. So 2400 has increased by 6 lakhs and 24 2000 to 1 24,150 has increased by 13.73 lakhs. So call writers are actively fighting back here. The ATM tag sits directly next to the cluster. So call writers are setting up a trap at 24,100. They are consistently adding fresh intraday positions as red lines. This means any quick up move from 23,996 towards 2480 will face immediate profit booking and heavy resistance. So we'll just look for the setups using this. We'll just mark these levels. So 24,100. So these are the immediate resistance level. So if we look at 24,050, 24,050, we don't have a strong resistance, and just keep it for 24,100. So these are the immediate resistance levels to look for. So if we look at the possibilities for today's trade setups, the first one is mean reversion. So Nifty drift down to 23,980 to 24,000, and green bar at 24,000 remains steady or grow larger. Go long, buy call options or short puts with the strict stop loss below 23,950, and you can target around 24,060 to 24,080 because we have a strong resistance level at 24,100. So keep eye on that level as well. So the second trade setup would be short covering squeeze. So if Nifty pushes past 24,100 at this level and holds for 15 minutes, the red bars at 24,100 and 150 or 24,100 and 150 so begins to shrink. With hatched lines disappear and turning into a negative open interest. Go long on a momentum breakout. So if those calls writers panic and cover their shots, it will act as a rocket fuel, causing a sharp rally towards 24,200. So the third one would be the distribution short. So range play. So if Nifty tests 24, 120, 24, 140, but fails to break, we have a strong resistance at 120 as well. So red bars at 24,150 continues to grow taller. Then short the index, buy put options targeting the retest of 24,020. Stop loss placed strictly at 24,165. So if we want to discuss about the risk management and the traps, there's a trap called as hatched line trap. So if they see the hatched lines on the green 24,000 bar suddenly begin to flatten or decrease while the price is falling, it means the big players are fleeing. If the put traders run away, do not try to catch the falling knife. So these were the option chain analysis and index analysis for Nifty. So if you have any questions regarding the index and option chain analysis, let me know in the comments. We'll be moving on to Bank Nifty and its option chain analysis. So let me know in the comments if you have any doubts related to the Nifty index, and let me know what's your position on Nifty. Which directions are you planning to trade? So we are also given an update regarding Nifty that it would move around 20 to 30 points upward. So after the update, it had exactly moved 20 to 30 points. So we'll now talk about Bank Nifty and its option chain analysis. So before that, we had also given an update regarding the Bank Nifty at 10:48 a.m. that it has taken a support and it would move 50 to 100 points. So after our update, it has exactly moved 50 to 100 points here. It has moved around 106 points. So looking at the Bank Nifty chart, we'll just discuss Bank Nifty options in. So the Bank Nifty spot is currently trading at 57,796, which is up by 0.45%, while the max pain is heavily at anchored up at 58,000. So the spot price is up slightly, but it's currently trading near a 270 points below the max pain level of 58,000. So historically, max pain acts as a financial magnet for institutional option sellers. So this layout indicates that the sellers are expecting or heavily incentivized to pull the market up towards 58,000 by expiry. So creating a hidden bullish tailwind despite immediate resistance. So if you look at the PCR level, it stands at 0.303, while the overall PCR stands at 0.8652. So this is deeply in the oversold bearish territory for immediate strikes. It tells us that call writers are aggressively spamming the market with supply compared to put writers. So, however, because it is so low, it acts as double-edged sword as well. So it means the immediate trend is heavily restricted by any upside move. But any upside move will trigger short covering panic. And if you look at the India VIX, we can see that it stands at 13.56, which is down by 0.04. So India VIX is sitting quietly at 13.56, and this confirms that there is no systemic panic. So the heavy call writing we see a structural play, not a fear-driven sell-off. So the market will likely move rhythmically rather than via erratic massive gapping. So we'll look at the OI chart. We'll look at all the strike prices. So the single tallest column on the entire chart is at 58,000. So it is showing a huge solid block with a strong hatched top expansion. So this is where the bears have set up camp. So the massive hatched portion indicates that call writers have been aggressively piling in today. So they are heavily betting that Bank Nifty will not cross 58,000. So the call OA has increased by 1.06 lakhs, where put OA has just increased by 750. So the total call OA stands at 10.37 lakhs and the put OA stands at 2.68 lakhs, showing the massive difference between the call OA and put OA. This shows that the bears are dominating. And the immediate support level is at 57,500. So, however, we see a red bar is stronger than the green bar, but it features a fresh intraday addition. So this is a major warning sign for bull, even at a lower psychological level like 57,500. All ratings are actively fighting and writing options. So true put writing support is sparse on this chart. So meaning downside cushion is relatively thin compared to Nifty. So we'll just look at the trading setups here. So the 58,000 short rejection play, which has a high probability. So if Bank Nifty rallies up towards 57,900 to 57,960 zone, so the massive red bar at 58,000 stays rock solid or continue to grow taller. So short the index anticipating a rejection of the 58,000 wall. Stop loss strictly at 58,050, targeting 57,750. So the second one would be the mean reversion long, where if Bank Nifty dips into 58,850 to 57,550 support, you can the green bar at 57,500 holds firm and the spot price starts consolidating. Go long, targeting a bounce back towards 57,550 with a tight stop loss. So the third option would be uh, short covering nuclear option. So the third setup would be short covering nuclear options. So if Bank Nifty successfully breaks and sustains above 58,050, more if for more than 50 to 15 to 20 minutes, you can switch to 15 minutes time frame and look for a 15 minutes candle close above 58,050. So once you get the confirmation, the massive, and you look for a confirmation in the OI chart. So if the massive red bar at 58,000 rapidly begins to shrink, indicating a call writers are running for cover, then you can buy call options immediately. When a wall that big breaks and the short covering rally can easily throw Bank Nifty 200 to 300 points higher in a matter of minutes. So these are the three trade setups that you can look for. So, but always keep in mind, because the PCR is so low, 0.303, the market is heavily skewed towards call writing. So if a sudden positive financial spike or institutional buying hit occurs, the upward move will be explosive due to short covering. So this would be the trade plans for Bank Nifty. So hope you got an idea on Bank Nifty index and its option chain analysis. So let me know if you have any doubts regarding Nifty and Bank Nifty, and let me know your view on Nifty and Bank Nifty. So within 5 minutes, we'll move to Sensex and its option analysis as well. Yeah. So we'll now talk about Sensex and its option chain analysis. So Sensex is currently trading firmly right under the critical psychological threshold of 77,000. So the spot is currently at 76,852, which is up by 0.49%. So the orange vertical line, which you could see here, is exactly where the price action is currently stabilizing. So the total market interest for the put OI and call OI is yeah. So total puts is 4.70 crores and total call OI is 3.79 crores. So if we look at this, so if we look at the broader structural data inside the tooltip box, we can see that total puts is at 4.70 CR and total call is 3.79 crores. So on a macro level, the bulls hold a overall volume edge. So this indicates that the major market participants have established a massive cushion of downside protection across the wider contract series, creating an underlying structural safety net. So India, which is holding stable at 13.45, which is down by 0.015. So showing that trading remains orderly, calm, and free of panic-induced premium spikes. So this favors structured option writing strategy over any random momentum chasing. So if you look at the OI chart and 77,200 strike, yeah. So to the left of the spot line, we can see 76, 900, 700, 500, and 300. Right. So the chart is dominated by giant green towers, nearly all of them featuring massive striped extension at the top. So this represents exceptionally aggressive fresh intraday put writing. So, so institutional players are actively building a ladder of safety. They aren't just holding old positions, but also they are actively putting up fresh capital to ensure Sensex does not slip below 76,800 to 76,900. So if you look at this 76,500 level, it has increased by 26.56 lakhs, where call OA has just increased by 86.90k. So you could see this massive difference. So the active ceiling currently is 77,000 and 77,200, where you have a resistance over here. So we can see call OI as 14 point, yeah, the call OI has 13.51 lakhs as it has increased, and put OI has increased by 11.64 lakhs. So this is the immediate resistance level. So currently the stock is trading near 76,860. So mark your zones, just mark the 77,000 level. So just look how the price interacts here, so reacts here. So based on this, if we want to frame three trade setups, so we can see a 76,900 mean reversion buy, which has a high probability. So Sensex undergoes a minor dip testing 76,850 to 76,900 range near the ATM mark. So the massive green bars at 76,900 and 76,700 continue expanding or hold firm. You can execute a long position capturing a bounce of this heavy support ladder and place a stop loss strictly below 76,800, targeting a return to 7750. So the second trade setup would be 77,200 supply zone. So you can see a strong supply zone over here. Our indicators also given a strong supply zone here. So if the red call Y bar highlighting in the tooltip continues to add volume, keeping up puts pinned low at 3.19. So if this increases, if you see a call OI addition in this bar, and if the price taps into the supply zone, then you can short the index buy puts, anticipating a clear rejection of the 77,200 call wall. Place a strict stop loss 77 above 77 250, targeting 77,000. So this would be the second setup, and third setup would be the short covering explosion, which is also we can also call it as momentum play. So if Sensex firmly breaks and holds above 77 230, so if you just switch the chart to 15 minutes, look for 15 minutes candle to close above 77 230. So if you see the confirmation in the call OI adding up, and whereas rapidly dropping as sellers scramble to close their positions, then go long on pure breakout momentum. Or if the 9.13 lakh fresh intraday call writers panic and cover, it will spark a sudden massive short squeeze accelerating Sensex directly up towards 77,400 to 77,500. So always look to the green bars and currently look like imprintable fortress. So any rapid shrinking of the hatched areas means big funds are unwinding the risk. So the green line shrink while price drops about all the long positions immediately. So this would be the analysis on Sensex and by using option chain analysis. I hope you had a clear view on all the index. So manage your risk properly. Don't just blindly go for trades when you see a breakout. Use all this information. Have a clear confirmation. Look for technical chart. Look for candlestick patterns. So we are given an update on. So we have a update. So this is purely for positional traders. This FNO strategy. So you can buy Coal India. Yeah, you can buy futures July 2026 at 440, 441, and buy July 440 put option at 9.5 rupees. So the holding period is 1 to 10 days. You can expect a profit range around 5 to 10%, which is around 2 to 5K, and maximum loss would be around 13 to 14K. So the investment is around 40 to 45K. So there's the update on it's a strategy call. So positional traders can execute this call. So we are also given an update that at 10:47 we are given an update on Nifty that there is a chances of upward movement from this level we had given. So the price has currently moved more than 80 points, close to 80 points. And we are also given an update on Bank Nifty that there is a chances of movement, upward movement. So the price has currently moved. The price has moved more than 200 points after an update. So if you have any favorite stock to analyze, let me know in the comments and let me know what's your view on that stock as well. Put your favorite stock in the comments. Let me know if you could try to analyze your favorite stock and also let me know your views on that particular stock. So our indicator has also given a buy signal at 9:43 a.m. today, and we have achieved around 0.47%, which is around 272 points in Bank Nifty. Yeah, and when we look at Sensex, we achieved around 378 points. So we got a buy signal around 9:30. So we easily covered around 378 points in Sensex, and Nifty, we had got a buy signal around 9:35. So we easily captured around 1 or 2 points on Nifty. So in all these index, we got a perfect buy signal from our indicator, and we could easily capture more than 200 points in each index. Nifty, we got around 103 points. So if you want to contact us and know more about this particular indicator, we have given our website. We have given our website in the chat box. So go to, you can check that, and if you want to know anything about the indicator, you can contact us. We can explain you in detail how it works. So we'll be back in another 15 minutes. We'll just discuss about the stocks to look, particularly based on open interest, and we'll also be discussing about sectoral wise performance, which sector has performed well and which sector has underperformed. So we'll all be discussing about it. So meanwhile, if you have any stocks or if you have any doubts related to index, let me know in the comments.
So yeah, guys, we have done the analysis, and let me know that if you are taking any positions or if you are holding any position right now, just let me know in the comment section. We'll together analyze it, and we'll just like we'll try to conclude where it goes or something. So let me know in the comment section. And also, if you want to contact us and want to know about our tool and the indicators we are using, so you can contact us anytime. The link is in the chat box. Also, we have mentioned the website in the description. Just go through it, and you can contact us anytime and ask us for the demo. We'll give a demo, proper demo. So hi guys, welcome back. So as you guys know, as we know that we will be going through the open interest data every day, and this tells us where fresh money is entering and the futures and option market also, and where positions are being unwound. So if it's your first time watching today, you're welcome. And every day we'll be at this time, around this time, we'll be sitting together and we'll be looking at the numbers, why interest spots, and try to understand what the big players in the market are doing. Not to predict the future, but to read the present a little more clearly. So before we actually begin, just quick note that everyone will hear it today is purely an observation of data. It's not biosync or something, and it is not an investment advice. Please treat this as a learning and always do your own research before taking any positions in the market. Let's start then. So before we jump into the open interest numbers, let's just quickly set the stage. Yesterday's session closed with the broader market holding its ground, and today we are seeing this get reflected clearly in the derivatives data as well. So now, what does open interest matter so much? Simply put, price tell you what happened, but open interest tells you how many people are actually involved in the move. A price move with the higher raising OPI means fresh positions are holding being built, and that move has some conviction behind it. A price move with falling OI usually means people are just existing, and the move may not have long legs. So today we are just going to the numbers. Keep that one filter in mind. Are seeing fresh build-ups or just unwinding? That's the lens we'll use throughout this like session. So one is index of open interest. First one is Nifty 50. Let's start with the Nifty first. So open interest has moved from about 50.7 lakh contracts yesterday to 67.4 lakh contracts today. So that's an interesting nearly 33%. So in one single session, it is a very sharp jump. And also volume has also been extremely heavy, over 2.4 crore contracts traded, and the total value across future and options has crossed the 19.4 lakhs crore rupees. That scale tells you this wasn't quite there for the index. The underlying is currently sitting around 24,022, and with this kind of OI addition, my honest reading is both side bulls and bears. So are actively positioning today, not just sitting on the sidelines. So we are moving to Bank Nifty. OI is up about 15.3% from 6.7 lakhs to 6.75 lakhs to 6.78 lakhs. Option premium value alone has crossed the 1.46 lakhs here, lakh crore here. It shows just how much actively is happening in the banking basket like today. Underlying is around 57,952. Banking has clearly not taken any backseat today. So yeah, the next one is Finifty. It shows the sharpest percentage jump among all the indices, up over 82%. Throughout, I'll be like honest, the base here is much smaller, so a big percentage move doesn't actually automatically mean a big absolute move here. So still worth nothing. Also, mid cap Nifty is up close to 22.6%, and this is just important that when mid cap index OI rises this much, and it usually tells us broader market appetite in large cap focused trading. So yeah, we'll talk about the sector which is IT and technology. So honestly, this is where today's biggest story is sitting. KPIT Technologies has seen its open interest triple over 203%. That is not a small move. That is the sharpest jump on our entire list today. So Tata. So yeah, the next one is Tata Elxsi is up near 57%. Tech Mahindra is up to close to 10.6%, and Coforge is up 8.6%. Also, Oracle Financial Services, KFin Technologies, and Emphasis are all up around 7%. So even the large cap IT names HCL, Tech, Infosys, TCS, Wipro are showing a mild but steady OI addition between 2.2% to 5%. Nothing dramatic there, just but consistent. Overall, IT is clearly the sector where the loudest voice in today's data. Moving to auto, Maruti Suzuki stands out with OI up 16% along with strong volumes and a future value crossing 1 lakh crore rupees in its own. And also, Motorcorp is up over 11%. Ashok Leyland is close to 8%. Tata Motor Passengers Vehicles, which is nearly 4.8%, and Bajaj Auto is close up to 4.7%. So, two wheelers and passenger vehicles both showing healthy interest today. Auto is not lagging behind. And we'll talk about the FMCG and consumer. So it's yeah, here's something a little unusual. FMCG stocks don't normally see this kind of sudden Y jump, but today Dabur is up nearly 33%, and Radico Khaitan is up over 24%, and Nestle India is close up to 11%. Britannia is up close to 10.7%, and Marico is up over 8%. This is a very broad-based move across all the consumer basket. So the only name bucking the trend in this whole list is interestingly Colgate and palm oil, which is the single stock showing a small OI decline today, down about 0.4%. So in the pharma, Sun Pharma is up close to 11%, and DV's Labs and Apollo Hospitals both are about 9%. Torrent Pharma is up close to 8.83%, and Dr. Reddy's, Cipla, Lupin, and Biocon all are showing steady mid single digit to slow double digit OI addition. A healthy broad move across the whole pharma pack without one single name running away from the rest. So metals are participating too here. Jindal Steel, JSW leads with the OI up to 10.6%. Hindalco is close to 6.9%, and Tata Steel, which is close to 5.8%. Vedanta is close to 5.1%. So these kind of move across metals often tracks global cues on the dollar and also the commodity prices. So worth keeping all half of an eye on international markets alongside this. So banking is active, but a little more measured at the individual stock level. Kotak Bank up to close to 4.6%, and also ICICI is close to 3.5. Axis Bank is near 3.2%. PSU banks like Banks of Baroda and Union Banks are close, showing 3% plus additions. And HDFC Bank, being the heaviest weight, is completely calmer, up just under 2%. But on the larger base in the whole list, over 6.6 lakh contracts. And Adani Power, Y is up over 7%. NHPC up close to 4%. Vary Energies up close to 3.9%. Power Grid up to 3.8%. The renewable energy names Adani Green, Adani Energy Solutions, JSW Energy are all showing steady, if modest, build up as well. And finally, the PSU and defense basket, Cochin shipyard up to close to 4.4%, and RVNL up to close to 4.8%. BHEL close to 3.5, and Mazagon Dock up to 3%. Defense name like HAL and BL are showing more modest single digit percentage addictions, but on very large absolute contract numbers. So don't just read too little into that. Just check out the news before just taking any wild decisions. So today's open interest build-up is genuinely broad-based and IT leads by a sentence. But FMCG, auto, pharma, metals, realty, and also PSU names are like all participating. And this is not a just one sector market today. So yeah, top 10 OI gainers. I'll be mentioning the top 10 AI gainers for today. One is Britannia. No, no, no. East is Britannia. Yeah, the KPIT. First one is the KPIT of 203.98%, which I mentioned all the percentages, but I'll be telling the individual stocks name according to the accordingly top Y gainers for today. So one is KPIT, then Tata Elxsi, and Dabur India, then Radico, Page Industries, then DMart, then Maruti Suzuki, and in seventh, no, in the eighth, 361 OM, and ninth is Bajaj Holding, 10th is Hero Motocorp, and then PG Electroplast, then 12th is CDSL, and 13th Sun Pharma, 14th is Nestle India, and last one is Britannia. So these are the all 15 top 10, top 15 OI gainers for today. So yeah, there it is. KPIT Technologies is the number one by today, and by a huge distance, more than three times the OIs had just yesterday. So that alone tells you where the market attention is concentrated today. It's not just the so this list you have guys are like seeing it's not just dominated by one sector. We have got IT, also auto, FMCG, also real estate and financial service, all represented in this top 15 today. So that broad spread is exactly what we spoke about like earlier. So, percentage change tell us one story, but let's just also look at where the actual rupee value is concentrated today. Because once a small stock can show huge percentage jump on a teeny base, while the real money often sits elsewhere. uh, Commodity MCX and Maruti are like almost neck and neck at the top, but both crossing 1.25 lakhs crore rupees in a combined value. Interesting to see a commodity exchange stock sitting right at the very top alongside with an auto major. And you guys can notice that KPIT again, it's not just showing the biggest percentage jump, it's also sitting in the top three by active actual value. That combination, a huge percentage move back by serious rupee value is exactly why it's our headline stock for today. So I'll be telling the top five stocks you should keep your eye on for today. The first one will be I'll be mentioning KPIT Technologies, which I already mentioned twice. This has to be our number one for today. Open interest has jumped from around 17,600 contacts to nearly 53,500. That's an increase of over 200% in a single session. Combined with the total F&O value near 98,900 lakh rupees. This is easily the most talked about name in today's data. So whenever we see a jump in the sharp, it usually means either a big structural development or very strong directional conviction build up. So worth tracking closely through the day, which is KPIT Technologies. And next one is Tata Alexi, why up nearly 57%, and the stock has been quietly building attention over recent sessions. Combined value has crossed 51,500 lakh rupees. When a stock keeps showing up on our radar session after like session, it's usually not a coincidence, I guess so. So you just better keep your eye on Tata Excel, Excel. The next one is Dabur India, up nearly 33% in OI. As I mentioned earlier, FMCG names really see this kind of sudden jump. So this one stands out purely because it's just unusual for the sector. And the next one is Radico Kython, which I already mentioned again. Why up over 24%, relatively smaller stock by market cap, but the underlying is trading above 3,900, and the sharp percentage jump in OI tells us fresh positions are being actively built here in the Radico Kython. So better you guys keep an eye on Radico Kython. And the fifth one will be Page Industries with a Y buildup of 21%. And remember, the stock trades at a very high price, above 42,000 rupees. So even a small percentage price move here translates into a very large value move. So definitely want to have you on your like watch list for today. So yeah, I think after this, I think you should keep five more stocks in your just in your wish list or note list. You just keep them in your note list. One is DMAT, as I told, open interest up to 19.3%. Strong retail interest is building over here, and Maruti Suzuki, which is 16.25% of open interest build up. High futures value in the auto space today, and 361 one. Also, the Bank Nifty, which is 15.3% open interest, worth tracking for anyone trading the banking basket for today. And the CDS, why close to 11%, steady and consistent risk over the last few sessions. So, as I mentioned, KPIT, I'll be watching it closely through the session, but I won't be giving any specific targets or stop loss here in our session. So, that's for your own analysis or your advisor to help with it. So if you haven't already, like just let me know in the comments. So which are the stocks you have been analyzing and which are the stocks of the day according to you, and which are the stocks you kept in your wish list for the today. So let's just wrap it up. Nifty, Bank Nifty, Fin Nifty, and Mid Cap Nifty showing strong fresh open interest addition today, which are actually major indexes. IT led the sector pack with KPIT Technologies, Tata, LC standing out sharply. The move was broad based. FMCG, auto, pharma, metals, and realty and PSU names are all participated here, and MCX and Maruti led in terms of actual rupee value traded. So our five stocks are like tracked today: KPID Technologies, Tata Alexi, Dabur, Radico, Khaitan, and Page Industries. So everything we discussed is purely a reading of open interest data. It is not recommended to buy or sell. Please always just do your own research and consult. So we'll be back with the outperformer and underperformers according to the sectorial wise. So we'll be back with the sector which are performing good with the updated heat map. So be with us. So, yeah, guys, we're back. We'll be talking about the heat maps now, the sectors which are good, doing good, and the sector which are underperforming. So, yeah, instead of just looking at one index, we are going to zoom out like little and look at the entire sector. So, because on some days the real story isn't just Nifty and Bank Nifty, it's in the how money is rotating between sectors. And today's looks like exactly the kind of the day. So you should note it down that everyone today is reading of index data and not just buys the call or something. So on the green side, Nifty Realty is about 2% and Nifty Media is up just as much, all over 2%. Nifty FMCG is up to 2%. Nifty MS Financial Services up to 1.2%. So on the red side, Nifty IT is down by close to 1%. Nifty Metal is down by 0.83%. MSIT and Telecom is down close to 0.66%. With small healthcare is close down to 0.49%. Pharma is down close to 0.46%. Healthcare is down close to 0.35%. So Nifty 500 healthcare is down close to 0.3%. Also the chemicals, yeah, it's close to 0.21%. So some stocks, some sectors are sitting quietly in the middle. Auto is clearly close to 0.72%, cement up to close to 0.66%, oil and gas up to 0.58, consumer durables is near to 0.28. So just from this one sweep, the picture is already forming. It's largely green day for financial and consumption linked sectors and red day for IT, metals and pharma healthcare. That's the story we are going to unpack one. So outperformers are one is Rifty Realty which is 2.04%. Today is actually top performer sector. It's leading the entire board today, and when the sector runs, it's usually a signal that expectations or liquidity sentiment is turning favorable. And DLF, one of the largest realty names, tracking closely with the broader real estate sentiment, and tends to lead when the sectors run. So macro tech developers, that's Loda, has been one of the strongest names in the space over recent sessions, and worth watching whether today's move continues that trend. And Godrej Properties, a name that reacts sharply on the days like this, given how leveraged its business is to housing demand sentiment. And the Prestige Estates and Finox Mills, both have been showing decent momentum recently and a strong sector day like this. It's a usual among the names holding up well. So if you're tracking reality today, keep an eye on DLF, Lodha, Godrej Properties, and Prestige. So as your core basket. Second one is the second in outperformer list is one is second one is Nifty Media, is 2.03% up, right behind the reality. Media is a sector that doesn't move every day. So when it's up over 2%, it's worth paying attention. So the first one I'm taking is G Entertainment. So this is usually the heavier weighted and most traded name in the media basket and often leads the sector direction. And the second one is Sun TV Network, a steadier divide and paying name, but still moves with the sector sentiment. And PVR Inox, this one trends to be more volatile, reacting to both sector mood and many news around footfalls or content. Network 18 or TV 18 broadcast, smaller names but can also show sharp percentage moves when the sector is in the favor. So, if media interests you today, or if you are interested in the media today, so G, Sun TV, PVR Inox are the names I'd watch first, and followed by Network 18 and Nazara for the most aggressive place. Third one is Nifty FMCG up by 1.99%. This is a actually meaningful move for the sector that's usually for being slow and steady, not sharp. ITC, the heaviest name in the whole index. So when the FMCG moves like this, ITC's participation. So yeah, the next one is Hindustan Unilever, the other heavyweight, and the name that tends to set the tone for the rest of the basket. Nestle India, Britannia, and Dabur, all core FMCG names. And if you recall our OI conversation from the other session, some of these have shown fresh positioning build up too. So Tata Consumer Products and Godrej Consumer Products both have been heavily steady performers worth tracking for continuation. So today's FMCG strength is ITC and HUL, leading by weight with Nestle, Britannia, and Dabur, and Tata Consumer and Godrej Consumer supporting the move. And we'll dive into the underperformers now. The first one is Nifty IT. The first sector will be that, and actually today is the weakest sector. IT is clearly under pressure today, and this is not a sudden news. We are clearly seeing IT is bleeding from past 1 week, and this is worth understanding rather than just nothing. TCS and Infosys, the two heaviest names in the index. And so when IT is down close to 1%, it usually means both of these are like dragging, which is TCS and Infosys. And HCL Technology and Wipro typically move in the same direction as the sector, and today should be no different. Tech Mahindra has its own set of company specific triggers sometimes, but broadly follows sector's move now. LTE, Mindtree, Persistent Systems, Coforge, and Emphasis, the mid-tier IT pack. These names can sometimes show sharper percentage decline than the large cap on the weaker sector base. So if you're tracking IT today, watch with the TCS and Infosys stabilize through the session first. Then the sector's direction usually follows their lead. And the second sector, which is outperforming, is Nifty Metal, which is down by 0.83%. Metals are the second weakest sector actually for today, and this is one of often tracks global cues, the dollar index and international commodity prices. Tata Steels and JSW Steel, the two largest steels names in India, and usually moves together on the micro driven days like this. So, Indalco Industries has a global aluminium exposure through its subsidiary. So, it often reacts to the international metal more than the others. So, Vedanta, we'll take the Vedanta. It's a diversified metals and mining names. Tends to be one of the more volatile stocks in this market now. And Zindal Steel and Power, SAIL and NMDC. The PSU and mid cap metals names often showing sharp movement percentage names. So metals weakens today largely led by Tata Steel, JSW Steel with the Dalco and Vedanta also under pressure now. And the third sector, which is underperforming, is Nifty MSIT Telecom, down by 0.66%. So this is the mid-small IT and telecom index, and it's showing a weakness along the larger IT index, which tell us this isn't just a large cap specific issue; it's sector wide. So in this, Tata Communications and Indus Towers, the telecom infrastructure side of this basket. So SIFI Technologies and New Web Technologies, data infrastructure names, but sensitive to both sectors more and their own new flow. So between the large cap IT index and this mid small IT telecom index, both being right. So technology as a broad theme is clearly out of favor in this today's session. So let's just step back for a session and connect to the dots. So today, money is clearly rotating out of IT, metals, technology, linked with small names and into reality, media and FMCG. So these kind of patterns, defensive and domestic consumption sectors doing well, while export linked and commodity linked sectors lag, often shows up on a days when global cues are little soft. So when the dollar and interest rate expectation shift, it doesn't mean IT or metals are bad sectors or something. It doesn't mean really realty or FMCG will keep running forever. So sector rotation is normal, and it changes direction often, sometimes within the same week. So the thing here is isn't to chase whatever is green today, but to notice the pattern and see if it holds over the next couple of sessions before drawing any bigger conclusion. So yeah, I'll talk about the IT. Honestly, without a specific news trigger in front of us, this looks like a broader rotation moving rather than anything stocks specific. But I will keep watching through the session about the IT. Let me know in the comments. Are you someone who buys into the strength like realty or FMCG today, or do you prefer looking at the value in the sectors or go down like IT and metals? So, as I mentioned, today's top three sectors are realty, media, and FMCG, which are close up to 2%. And bottoms are IT, metal, MSIT, telecom, which are all under pressure. So, clear rotation from technology and commodity linked names into domestic consumptions and defensive. So, while watch list for the today's are J Entertainment, DLF, ITC, Godrej Corporates, HCL on the strong side. TCS, Tata Steel, and Infosys on the weak side. So that's it for the today for heat map and the news which are impacting on the stocks and the stocks which are the sector which are outperforming and the sector which are underperforming and the stocks which are underperforming and outperforming. So I have already mentioned the stocks which you should keep your eye on. Just keep your eye on the stocks which I mentioned, where I told that there is a movement in that particular stock. So just check out the updates. We'll be giving the updates, live updates, and we'll be back with the new updates. If there is a news circulating in the market now, we'll be here to quickly update the news. So yeah, we'll be back again with the updated news.
Hi everyone. So I'll just be updating the calls that we gave today. So starting with the first, we'll start with Nifty. So for Nifty, we gave a call at 9:37. So it was a call option. It was a call option. July 7th expiry, 23,700 call option. So the time was at 9:37. So we gave a buy signal at 9:37. So if we could see exactly our indicator has given a buy. So we gave this call at 9:37. So the entry price was at 325 to 330, and our target was 345, 350, and 398. We kept three targets. So all targets were reached. So the price made a high of 408. So we reached all target. And the second trade was second trade was Nifty 23,650 call. So it was at 9:24. So we gave a call on 9:24. So the entry price was at 365. So if we put 9:24, we see exactly the price was at 365 to 370. The entry price was. So we kept three targets. The first target was at 385, second was at 395, and third was at 452. So price reached all the targets, and the price made a high of 450. So this was two calls in Nifty, and when it comes to stock options, we gave two calls there also. So one was TCS, sorry, one was Trend, not TCS. So Trend 3,300 call option, we gave at 959,300. So the entry price was at 114 to 116. So yeah, exactly we gave here. So the target was 120, 124, and 144. So price reached first target, and it made a high at 121. Price made a high of 121. So we were able to capture the first target, achieve the first target, and we were able to capture 7 points, which is around 6.78%. And the next stock was Dixon. So on Dixon, we gave 11,500 put option. So the entry price was around 191 to 193. So we gave it, sorry, the entry price was around 298 to 300, and we gave it 12 o'clock PM. So 12 o'clock. So the entry price was around 298 to 300, and our targets was 305, 315, and 358. So we were So we were able to achieve two targets. We were able to achieve two targets. So the first target was at 305, second was 315, and the third was 358. So price made a high of 320. So we achieved two targets, and we were able to capture 15 points. So the price made a high of 322. And the third stock was ABB, where we told the clients to exit at market price. It was a break even, so that was the third stock. And when it comes to MCX FNO, uh, we had given a crude oil put option to buy yesterday. So this was around 5:30 p.m. So it was we gave a call to buy 6,700 put option yesterday at 5:53 p.m. So the entry price was at 215 to 220. Yeah, so the entry price was at 215 to 220, and the targets were 229, 235, and 272. So by 6:15 we were able to reach the second target, and by 9:44 we achieved all the targets. So the final target was 272. So we achieved it by 9:15, 9:25. So this was performance on MCX on crude oil. So today we are also given calls in Sensex. So we are given two calls in Sensex. So first one was BTST, which was given yesterday. So yesterday, yesterday by 3:25 we had given this put option to buy at 465 to 470. So we had told them to buy at 465 to 470, and the first target was at 520, second was at 565, and third was about 650. So price reached two targets and it made a high of 596. So we achieved two targets. We achieved more than 100 points here. And the second call on Sensex was at 10:49. It was about 10:49, and we had given a call option to buy. So at 10:49, the entry price was at 435 to 445. 10:49. the entry price was at 435 to 445. Here, what we gave, we can see the price was at 432, 435. We had given our entry price. So the target was 500, 545, and 650. So price made a high till 643 here, 644. So we just missed 6 points for third target. So we achieved two targets comfortably, and it made more than 200 points. So this was the second call that we gave today. So these were the calls that we gave today. Two calls in Sensex and two calls in Nifty. Three calls in stock, and one was in MCX, which was given yesterday. Crude oil. So these were the performance of calls today. So let me know if you have any questions related to the index for tomorrow, or you have any stocks in mind to watch for tomorrow. Let me know in the comments.